In the video, we are going to talk a little bit about a very interesting piece of price action for Euro-USD and 4-hour chart. The sort of thing represents a good opportunity to explain the relationship between highs and lows, as in the chart, and how their analysis can be one of the best tools available to read. In the left piece of the chart, we can see it is the creation of lower high and lower lows. This is important that you realize that price doesn't create any significant higher highs in that movement. And that shows the power of sellers on the way down. Lower low means the sellers were able to advance price in their direction. Lower high means the sellers were able to stop buyers from creating a higher high. Both situations denote denominations of sellers over the buyers. When market was created higher high and higher low, this means that the buyers are being able to advance price in their direction. Now they are stopping sellers from creating a lower lows. This is very important. You need to realize the price are not always this simple, as the points between high and low that we can get quite intricate insurgent situations due to the existence the different groups of buyers and sellers with different magnitudes. We can start talking about the mechanics of how the control of the market shift from the hands of sellers to the buyers or vice versa. Understanding the power shifts between buyers and sellers will dramatically improve the way you trade. One of the many options we have to begin the apprehension of this process in a situation like this is the use of a simple trend line. If we draw a trend line that roughly catches the most important in this downward movement, we will begin to notice something interesting at the end of the line. We can see that price switched sides. So instead of treating the line as a resistance, it starts treating as support. We can consider validation of the line by looking at how many times price touches the line without violating it. The fact that the lower tails of candle touched the line and act as if there is a barrier there, it means that the line, did have some importance. Beyond the validation of the line, we are noticed that is the first time the price closed above those lines since the beginning of the downward movement. The nuance here is that the movement where price breaks the trend line doesn't show any unusual volatility. It is relatively normal price action, like the rest of the downward movement. Beyond the load barrier provided by the line, there is also a horizontal barrier provided by the same area of price. The upper tail of those candles are hitting something in that area, and they are not being able to break it at that point. Price breaks both barriers and starts showing a different kind of volatility to the upside. Notice that the relatively large green candle is larger than all of the previous candles in a downward movement. The sum of the subtle clues and price. The subtle clues and price action is what tells you that the trend has changed direction. There is no single signal that will spark a green light to tell you that it has happened. It is as simple as it gets, in terms of how the power transfer happens. We can also see that when there is some level of certainty, after the bullish bar, with more volatility, the price ends up retracing back to the horizontal line to test it as a support. And it does the exact same thing a few bars later in the minor depends on. If we step back a little bit, we will see that this is the birthplace of an upward movement almost 100 pips. This is the simplest form of the power transfer between buyers and sellers, near reversal points of the market. The problem is that this dynamic layers on top of itself. Hence, most of the times, this is a much more complicated process to analyze.